NASDAQ again should be up more because of Netflix, because of we're seeing Oracle rally, Nvidia rally. A lot of these bigger chip names are rallying to the upside. All right, basically earnings beat by a few pennies, revenues beat by a very minimal amount. In fact, earnings beat by only about 1.5% better than expectations. That's not a big beat. Any daily close above the topping tail high right there at about 109,300, that would negate the topping tail. It would then be void, and you would start to expect a break to the upside to about 120.
Bitcoin is facing a critical moment as Gareth Soloway spots signs of a potential pullback. Could it crash to $92,000, or is a rally to $120,000 still on the table? Meanwhile, a $500 billion AI megaventure is shaking up the markets, with Nvidia and Oracle taking center stage. Stay tuned as Gareth breaks it all down and reveals what's next for Bitcoin.
Markets are trending up, not only because of Netflix, but also because of a new venture, $500 billion new venture with OpenAI, Sam Altman, Larry Ellison from Oracle, multiple other players here to develop and build out the US's AI side of the basically technology sector. So there's big things here that's helping Nvidia go up, because if, again, 500 billion's going towards this build out, you got to assume that the Nvidia chips are going to be needed. So lots of positives. The markets aren't up a ton. NASDAQ is obviously leading the charge, S&P up about 0.5%. We can see that again. You could see the markets. This is the pre-market data on the S&P or the SPY. This was yesterday's close right here, right? So that was your close yesterday. You had your little initial pop on the S&P on the Netflix move, and then the grind up. Little bit of a pullback there, but for the most part, a grind into the 8 p.m. close on the after-hours session right there. When markets reopened at 4 in the morning, a little bit of a push up, and then a slow float up into the open today. And again, we're less than 30 minutes away from the stock market opening. So again, just generally net positive, not a huge gain, about 0.5% on the S&P. NASDAQ again should be up more because of Netflix, because of we're seeing Oracle rally, Nvidia rally. A lot of these bigger chip names are rallying to the upside. All right, so let's go to the daily chart. Yesterday we talked about how we were stuck in this parallel, and this level would be a key level to watch going into yesterday's close. Again, just to reiterate on what these levels were, you had these lines, right? This parallel line here with this line up here, which was these three little pivots. Yesterday we closed on or fractionally above it. As of now, it looks like we'll push above that today, but I do want to wait till the close. You know, trading the close today can look at this and see where we are. Did we hold our gains today, or do we see institutional selling? So again, little things like that need to be watched. Let's get into our latest here. Let's get into our earnings from Netflix. This again, the earnings, interestingly enough, you can see right here. I mean, look at this monster move here. I have this level that I'm going to watch on the daily chart. It's a parallel. The level here is right around 980. So I'm curious, do we close today above 980 or below? Because again, this upper trend line going back to this pivot high from 2023, which is parallel to these lows, are going to be something to behold. But again, you know, right now we are trading just below that 1,000 level. And I want to go over here and just discuss something. So listen, the markets are always right. Price action. Right now we're trading again, really just above this line here, right around $990 to $1,000. But basically earnings beat by a few pennies, revenues beat by a very minimal amount. In fact, earnings beat by only about 1.5% better than expectations. That's not a big beat. Normally you would say, okay, if that was the only metric here, the stock might even be down today, just because again, it has had such an incredible run. But the key was their subscriber numbers. Now, this is where things get a little shadier, right? So I always try to be straight with you guys and point things out, while also pointing out that price action is truth. But obviously, I want you guys to know the details on what is going on in the underbelly. So let's look at this. So subscriber growth was massive. They came in above, almost at 19 million subscribers added. They were only supposed to add about 9 million. So we're talking about 10 million additional subscribers essentially being added. Now, this is where it gets shady, is that number one, you had the Tyson Paul fight. So you got to figure at least a couple million people signed up for that. The question is, are they keeping their subscriptions? The next factor is the NFL games on Christmas. Now, Christmas was right at the end of the quarter. So you have people signing up. And listen, if you're like the ad-based tier is what, $7.99, $8.99, whatever it is. But if you're a football fan like I am and you didn't have Netflix, just to get those games alone, it was probably worth the $8 to get it, right? And so the key is this, is that they're giving us these subscriber numbers with people signing up at the end of December. We don't know if those they canceled. So let's say 1 or 2 million signed up for the football. Let's say 3 or 4 million signed up for the Jake Paul fight, Tyson fight. Again, we don't know about those cancellations. Now you might say, okay, well, we'll know in the first quarter. And then no, we won't. This is where it gets even crazier. Netflix will no longer, after this quarter, Netflix will no longer report its subscription numbers. So this was it. This is all you're getting. Going forward, you're only going to get revenue and earnings numbers. I mean, again, call me a conspiracy theorist, call me whatever you want, but this seems a little bit weird, especially that they put these football games right at the end of the quarter to get that boost up. Again, for all we know, 2 million, 3 million people have canceled since then, but they will never be reporting that in the future. It's just what it is, just what it is. So that's one of the reasons why I think this is a fade here. A 1,000 even number, which is what we're tagging here. Again, even numbers have some sort of amazing factor to them. I would actually look to fade this and bring it back in. I'm not saying it's going to come, by the way, I don't think it's going to come back to the break even today, but I think it could come back to, let's say, 975, 965, maybe even 950 today. We'll see where it closes, but if it doesn't even come back there today, I still think it's a fade on a swing trade basis back down, as I gotta believe smart money, institutional money, realizes what I just said, and they gotta understand that, again, chances are this was the last hurrah for Netflix, since this is the last time they were reporting subscription numbers, and again, we'll likely see price from the institutional side they'll be dumping into this. Retail may buy it though, and that's what they're hoping. They're hoping this number gets retail to buy, institutions to unload.
Gareth Soloway dives into Netflix's jaw-dropping earnings report. He highlights their massive 19 million subscriber surge, double what analysts predicted. But here's the catch: those numbers might not be as solid as they seem. He also shifts focus to the $500 billion AI venture involving OpenAI, Oracle, and NVIDIA, which is fueling optimism in the tech sector. NVIDIA's chips are set to benefit big time, but Gareth warns that institutional investors might be cashing in on retail hype. Stay tuned for his Bitcoin predictions.
Oracle rallying higher on this new venture, $500 billion venture with a B. And again, this is with ChatGPT's OpenAI and so on and so forth. There is a level, I actually already traded it pre-market gap fill right here at 190.60. So again, this will be a key level to watch. 190, really 190.50 we'll call it. So you see the big gap right there. So price again up into that. That will be first resistance. And then you have your secondary resistance right around 198. And then the last thing, and I saw Drew had posted a chart on this, is that you also have a parallel here. Let me see if I can do this correctly. But you also have a parallel right up here, which gives you a secondary level. So these would be your key levels. Level 1, or just above 190, that could be day tradable today. As with this one, the swing trade level would be right up here. And this price point on the swing trade is around 205 to 206. So that'll be something to watch. And sure enough, it did fall. I gave you guys the level here. I said 220 to 221 would be your key support. And sure enough, where did Apple go yesterday? Right into that level and got a bounce. Now it is trading slightly lower today, but this still should be very firm support, considering that you had a 15% drop from the highs in a straight line. So generally when you hit this, you get something like this, maybe back to the scene of the crime break right there, and then eventually the bigger rollover. So I still think Apple's going lower. I still think, again, their growth rate, issues with China, the Chinese economy, etc. These are all issues that are not over yet for them, and that you'll probably see the stock go lower. But on a technical basis, as long as it's holding this 220 level and doesn't confirm below, you favor a short-term bounce, and then maybe after that, a rollover to the downside. All right, next up, let's flip over to Bitcoin. Bitcoin is pulling back just a little bit on the charts. I always like to go over to the big board for Bitcoin to kind of take a look at it here. So really what we have in this situation is that we retraced up into that level, right? So there's your double top and your upsloping, and I've gone over this every day, but what you do is you get a topping tail here, and then very often when you get a topping tail, so let's just draw this in here. Here's a topping tail has to occur at basically a high in the last 90 days or longer. That is what it did. It actually pierced this double top, so it was a high, and you have to have a body that's in the lower, basically 25% close, and that's what, again, that creates. When you get a topping tail, I would say about 70% of the time you get a retrace of that, and so generally you'll get, basically there's a lot of bullishness here, and the institutions are dumping into the retail buying. That's why these candles usually form, right? You get bigger money dumping in after it pushes up. That creates that long tail or wick on top. But what ends up happening is that the buyers that were so eager to buy even at the highs, they're still there. And so oftentimes they'll come back in and price will rally up and retrace, and then you get your bigger fall over or rollover. So what we're curious to see on Bitcoin is, does that happen here? Now, the way you would know if it doesn't happen, any daily close above the topping tail high right there at about 109,300, that would negate the topping tail. It would then be void, and you would start to expect a break to the upside to about 120. As long as this holds in place, double top, trendline cross, and topping tail retrace, the path of least resistance, slight favorability, slight probability would be to the downside back to 92. So we'll keep an eye on that. For that to happen, by the way, the stock market's going to have to roll over. Like if the stock market's going to keep going higher and making new all-time highs, very unlikely Bitcoin would roll over. Again, it's a risk asset. It behaves as such. We've seen it roll over when the NASDAQ rolls over.
Gareth Soloway broke down Bitcoin's key levels, the 500 billion AI venture boosting markets, and Netflix's earnings fueled by questionable subscriber growth. From Bitcoin's double top to institutional strategies shaping stocks, the markets are shifting fast. Stay sharp, stay informed, and keep watching for more insights to make smarter moves. See you in the next one.